you could reason that the less of a price you have to pay for a Bitcoin, if you believe in the Bitcoin thesis, the more you should invest. Whereas what actually ends up happening is that the more it goes up, the more people want to pile on, and the more it goes down, people actually believe it's over. And so what that tells me is this market is not being driven by fundamentals. It's actually being driven by the psychology of the people.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's like finding the perfect avocado at the grocery store. Rare and oh so satisfying. I'm your host, Jay Hamilton, and today we're talking about how on-chain analysis can give investors an inside edge. And here to join us is Arkham Intelligence founder and CEO, Miguel Morel. Miguel, welcome to the show.
Nice to meet you. Thank you for having me.
Super excited to have you, Morel. For those who don't know Arkham, and if you're listening to this and you're investing on chain, you probably should know Arkham. The Milk Road Pro team knows Arkham. This is a tool. If I gotta say, it feels like CIA shit to me. Like if I'm using Arkham, I feel like I'm like Luther in Mission Impossible, and I have access to all this data that I shouldn't have access. But that's the amazing thing about on-chain is we have all this data, and you can now do market analysis. You can look for alpha. You can investigate exploits. All these things can be done on Arkham. The other thing I got to say that's really cool about Arkham is it's also a really good way to tell a story in a visual way. It allows you to look at on-chain stuff, which usually comes in, a table, a typical spreadsheet, and it's kind of, it's confusing. You can't really take much from it. Well, Arkham allows you to do it in a visual way, which is really cool. It's kind of nerdy visual stuff, I would say, which everybody listening to this show will definitely love. And the final thing I got to say about Arkham is also has their own token, ARKM, which has a $330 million market cap. So a very respected project in the space. So super exciting to have you on today, Miguel. Miguel, let's start off with when you yourself are using Arkham or a user is using Arkham. The big thing that everyone's looking for as an investor is looking for that edge, looking for that alpha. If you give us the inside scoop, the pull back the hood for us here, what are you noticing from your seat from looking at the data on Arkham?
I think Arkham in particular is really interesting because we give people the ability to see information that they literally could not find anywhere else. And so when you're using Arkham Intelligence and you're looking at the information on our platform, you're looking at information that in and of itself is alpha because there's no other participants in the market taking into consideration those who don't use Arkham, who would be seeing the same information as you. And so by definition, you have information that is above and beyond what the rest of the market has when you're using the platform. In terms of the actual trends that I'm seeing with respect to the things that have gone viral and what people are looking at when they're analyzing different things on Arkham, I think the number one thing by far recently has been large transfers from things like government entities. By far, over the past 2 weeks, all of the traffic that we have gotten to Arkham, all of the growth in that traffic has come from people analyzing the cryptocurrencies of different governments, for example, the German government being the most famous one, and what sort of on-chain movements these governments have been making and what the prospective impact to the market would actually be. And so in terms of trends, I would say that's one of the largest ones. The new kind of analysis of government wallets, whereas before this wasn't possible. Pre-Arkham, it was not mainstream to look at what governments were doing with their cryptocurrency. And now it is, right? And we have many different governments on the Arkham platform from the US, UK, Germany, China, that people can just go on and begin monitoring from day one. And so I would say that's probably the largest trend that I have noticed from the on-chain analytics perspective this cycle, which people being much more careful about analyzing who the big players are with major holdings and when they begin selling your token.
Yeah, I feel like everybody If you're on crypto Twitter in the past month, you have seen the Arkham German government dashboard. Like everybody's seen it. You're looking at it on a regular basis until it got to zero because we were all just tracking. Because obviously, when we know that there's going to be a large player that's going to impact supply and they're going to offload $50 billion worth of Bitcoin, the question is, okay, when are they doing it? How fast are they doing it? Is it going to impact the market? Is it going to impact the price of Bitcoin? Shout out to Bitcoin for swallowing that one up pretty well. And it's done. It's over. German government doesn't own it anymore. Everybody's sort of in the clear. But then we have Mt. Gox. There's another that I know that you guys have been following. And
That's another huge trend. Yeah.
yeah, there's another one. And it's, Silk Road in the US government. And there's going to be, this will continue to be the case. The other thing that's really cool that I see a lot in Arkham is, so recently there was the Wazir X hack that just happened. Was that like yesterday? And 230 million in crypto exploited off that exchange. And where do you go? Well, you go to Arkham to see, okay, there was a bounty I know put up on Arkham pretty quickly to try to figure out what happened here. And I think it was Zach XBT. Shout out to Zach for solving that one. Incredible how fast he works. And then you could see, hey, this is where the hacker took the funds. We can now see that hacker is sold out. So we know that it, for better or for worse, that's over. But that is the other thing that's amazing that Arkham allows, is that ability to see exploits, to see rug pulls, to see all the like shitty stuff, which I think is the reason you started Arkham in the first place.
That's right. Yeah, that's 100% right. And with respect to, how you were describing the way you were feeling, it actually, makes me very happy to hear this, because when we initially created Arkham, my vision was to give people a back computer for crypto. And so if when you're sitting down and doing all this research, that's the feeling that it inspires. It means that we succeeded in our vision.
Okay, so it wasn't Luther from Mission Possible. It was Bruce Wayne sitting down in the Batcave. Okay, cool. I'll get the analogy. I'll get the analogy right next time. Okay, when we zoom out, we're in a bull cycle right now. I want to get your take on where you think we are in the cycle in a second. But first, the thing, and I actually heard you say this in a recent interview, I believe you were in Paris, and you talked about how cycles are now based on chains. And the way liquidity is now moving between chains is affecting the price action that we're seeing within a cycle. In past cycles, we only really had Bitcoin and Ethereum. We didn't really have much else. Now we have a lot of chains, a lot of L1s, a lot of L2s, and we're seeing liquidity flow. The big thing we all need to know is, the question we always ask is, where is the activity? What is the on-chain activity? Where are there more wallets? Where is there more transfers? Where is there more liquidity? Because you can bet wherever the activity is, there's going to be positive price action as a result from that. Is there any chains that you're noticing that have momentum right now in either direction, either up or down?
Yeah, I think as a whole, the number one thing that I've been seeing recently is obviously, things pulling back to Bitcoin. All eyes have been on Bitcoin recently compared to other ones. We had a little bit of a kind of Solana season, not too long ago, but that seems to have lost a significant amount of traction compared to where the fervor and fever pitch that we reached a couple of months ago. That being said, I think that all of these different asset classes, and in particular the chains, they have communities that develop around them and create narratives about why their particular community is going to succeed and the other ones aren't, right? And so as things happen in the market, you always get new news about a given chain that is succeeding or another chain that's doing poorly. And right now, because so many alts have been bleeding and have gotten absolutely crushed even over the past, let's say, 60 days, compared to Bitcoin, which has remained relatively flat. Obviously, there's been volatility, but I think as of today we're at like something like 65,000 or so, and so it's been relatively flat for the past couple of months. And so as a whole, I would say right now people have been focusing on Bitcoin, focusing a little bit on Ethereum, but I haven't really seen too much activity or news with respect to the other chains. And so I think that, we'll probably end up getting more people coming into these chains as they begin chasing more returns once things start going up again in those networks. But for now, we're not really seeing very much.
The other thing I've heard you say is how reflexive crypto is. When things are going up, they tend to go up for a project. When things are going down, it can be tough to switch that momentum back into the positive. Is that something that you've noticed from using Chrome? How did you come about that understanding?
I think that is just a bit of a financial analysis of mine, not advice, but, my own kind of read on how these financial markets work. As a whole, when trying to understand, price action, which, even though I'm not necessarily a trader or a large investor in crypto, you can't help if you're building in the industry, but pay attention to price action. It's one of these things that people are constantly talking about and very interested in. And so there's kind of no escaping understanding what's going on with the price. And so you end up sort of detecting patterns and noticing patterns and cycles and drawing analogies and so forth. And so I think for me, the most important thing with respect to reflexivity is just the fact that the amount of volatility in crypto, I think, can't just be explained by normal market dynamics. I think there's definitely a more psychological component to crypto that doesn't necessarily exist in other financial markets, right? So, for example, with other kinds of commodities like, say, gold or silver, these are mostly driven by supply economics, right, and demand economics. It's mostly driven by the amount of this asset that comes out of the ground and is being sold. Stocks, for example, they have a lot of financial information that tends to really affect price. The revenues, the operating costs of the business, these sorts of things, and that tends to be a primary driver. But my understanding of cryptocurrency, what I've noticed is that cryptocurrency is mostly driven by market mania, psychology, and sentiment, and therefore reflexivity, because these things tend to be kind of, when you get one type of it, you end up sort of spreading it to other people, right? And that's why we get these massive boom and busts within crypto, because as things are going up, people believe that the currency is more appealing, and as it goes down, people believe that it's less appealing. However, with other sorts of asset classes, that may not even necessarily be true, right? Because sort of very intuitively, you could reason that the less of a price you have to pay for a Bitcoin, if you believe in the Bitcoin thesis, the more you should invest. Whereas what actually ends up happening is that the more it goes up, the more people want to pile on, and the more it goes down, people actually believe it's over. And so what that tells me is that this market is not being driven by fundamentals. It's actually being driven by the psychology of the people and the feeling that they receive when they see the price going up versus going down.
That is a great take. I have not heard that take so eloquently put. Very well said. When you zoom out and look at this cycle, where do you think we are in the cycle? The bull cycle started end of Q4 2023, Q1 2024. We're about 6 months in. What's your perspective on where we at and what we can expect moving forward?
I think this stuff is always really difficult to predict, and you can kind of lock yourself in by making any concrete conclusions on the future, which it's impossible to really say. But if I had to kind of make some sort of analysis of where we are in the market and where it's headed, I would say that every other cycle that I've been in has been something like 12 to 18 months long. And broadly speaking, you get this kind of initial rush from the previous lows to all-time high, and then a pullback, right? I strongly remember, in 2021 and in 2020, for example, November of 2020, I remember we touched all-time high for Bitcoin again. And then we had this kind of, what at the time felt like a crazy pullback from, I think it was like 19,500 down to 16,000 something, really not the end of the world, but everybody was kind of petrified because
Freaking out. Yeah.
yeah, all the alts were getting slammed as well. And then once we passed that, around New Year's, if I remember correctly, it was kind of around that Christmas, New Year's sort of time, early January. Obviously, everybody started piling back on, and then it ran from 20K all the way up to 60,000. And now we've had a very similar kind of echo of this situation where obviously post November 2021 all time high, We fell down to a low of, I think, probably 16,000 again around the FTX crisis. We ran it all the way back up to previous all time highs, and then we kind of pulled back a little bit to low 50s. And so it echoes really similarly to previous cycles. And while no one has the power to say for sure, I wouldn't be surprised if we saw new highs again.
I completely agree. One of the things that is really interesting about on-chain data tools is and on-chain financial markets is that they are always open. In our existing financial markets, there's a lag for investors, right? Quarterly reports come out every 90 days. Investment decisions are made based on old data a lot of the time. Whereas on-chain financial markets don't have this problem. What's the impact that you see of having real-time data in financial markets?
Markets will tend to trend towards efficiency. Markets want to become significantly more efficient. And the sort of primary reason for this is that market participants get paid for bringing efficiency to the market, right? If you have two different venues that have the same asset, but they're at dramatically different prices, then there is a natural market incentive to go and arb the two assets across the two venues until they reach a equilibrium point whereby there's no longer an arbitrage to be fulfilled. And so the markets, they tend to want to move towards a sort of an efficiency or an equilibrium. And so what this means is that with blockchains in particular, you have access to information about an asset, and in particular about the market supply and demand of a given asset, without needing to wait for a company to put the information out. So in things like stocks, for example, when you're dealing with large corporations, you have to wait for the company or the SEC or some other kind of centralized body to release information that before that point was material non-public information. And then you only get it during, let's say like the earnings reports or something like this. Whereas with crypto, you actually have the ability to access that information in real time. And so as more information about a business is created throughout the normal work and nature, and activity of that business over the 90 days before the earnings report, there is an inefficiency in the market in that things are happening in the business that people don't actually know about yet, that will later be reflected in the price. But it turns out that it's reflected in the price all at once during the earnings report rather than being reflected over time. Whereas with blockchains, you can actually see the number of addresses growing, on a block by block basis. You can look at the number of transactions. You can look at the TVL of a given protocol. You can see if it's been hacked. You can see, what the particular, customers of that product are doing on the chain. And so you can sort of back of the napkin your way to, an effective kind of valuation based on this information without needing to wait for the protocol to put out a statement. And so I think that having access to that kind of real time information should, in the long run, make blockchains a incredibly more useful and efficient way of doing things within markets than having them on kind of, centralized data server.
You mean to tell me that I could get up-to-date information from any Ethereum EVM-based chain every 12 seconds, whereas in the public markets, I have to wait 90 days? Like 12 seconds versus 90 days? What?
Yeah, that's exactly right. And I think that this is one of the core kind of value propositions for cryptocurrency and blockchain in general, because I feel the same way about that in the data world as I feel in the, kind of, banking world where, you have to wait 3 business days for a wire to clear and there's a phone call process and it's incredibly annoying. Whereas with, cryptocurrency, you're able to send it immediately and provide the person a receipt that you had sent the money to the address that they provided you. And so I feel like this sort of theory for data is just, the use case of banking, but in a different area.
Yeah, and it seems so obvious when you say that. It always just makes me think, why can't everybody just see that we have an incredible use case here that really is going to impact everybody's lives? Okay, last question before we let you go. Arkham Intelligence offers a few different services, and one of the services is the Intel Exchange. For those who don't know the Intel Exchange, can you just explain it quickly? Because it's a very interesting product. And I would love to know, can you pick maybe like a bounty to give us an example, like a good story of a bounty that's happened?
Yeah, absolutely. So I think that overall, the Intel Exchange is a way by which Arkham can get access to information to provide to the broader community that we wouldn't have been able to find elsewhere. And so, with Arkham in particular, we do our job of attempting to find as much information as possible about what's going on in cryptocurrency markets and who the respective owners of different wallets are. However, it is the case that our technology and our team isn't able to find, all information, right? There are situations where there's a particular person who has a data point or information that we don't necessarily have access to, right? And so what the Intel Exchange does is it creates a marketplace whereby people can incentivize one another to provide information in exchange for money. And so this is kind of like a new and novel way of attempting to create what we decided to call kind of liquidity for information or liquidity for data. And I think that this is one of the things that makes Arkham so novel. Now, with respect to bounty stories and some of the famous ones, I would say one of the most famous ones is probably one of the identifications of Do Kwon's personal wallets from the Luna collapse. So we had previously, put up a bounty for being able to understand more about Terra Luna, the people involved, the corporation, and how the collapse went down essentially. And so within the Intel Exchange, we then ended up getting a submission for one of Do Kwon's actual wallets, which we believe ended up being correct. And so that's probably one of the cooler stories. You can read about it online by just looking up Arkham Intel platform Do Kwon, and you can read the story. But at the time, this was major news because people were trying to scour and figure out where all this money had gone from Terra. And so I think that it was very interesting.
Yeah, it's super interesting and something that we've never had the ability to do before. Now, obviously, there's a bigger question of privacy of data versus publicly sharing data. And we don't need to go down that path today. I know that Arkham has a process through which you authenticate your data to ensure that a bounty has been properly upheld, and that's an ongoing process. But the ability to look up this kinds of data, as you said, I mean, we can't look up the way any of our governments are moving their fiat money, but they're all moving their fiat money in ways that might not benefit us very much as citizens of those countries or our investments, but we can certainly look that up in terms of their on-chain data. Miguel, it's been just a pleasure to have you on the show. I really appreciate your time and your insights today.
Great, thank you very much. It was a pleasure to be on.
Awesome. Thanks so much for listening in, everybody. Have a wicked awesome day. Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.